Welcome friends, are you ready to unlock the timeless secrets of smart investing? Today, we dive into The Intelligent Investor, a legendary guide by Benjamin Graham. Now let me ask you, what if you could make confident decisions in the stock market, avoiding common pitfalls, and harnessing the market's quirks for profit? This book teaches value investing, a strategy embraced by some of the most successful investors like Warren Buffett. Stay with us to discover why this method puts you ahead, and remember, this is just a teaser. Dive deeper by reading Graham's masterpiece yourself. The link is in our video description. Let's embark on this journey to intelligent investing where wisdom meets the market. Value investing isn't about chasing trends or getting lost in fleeting market fads. It's about understanding a company's worth and investing in ones priced below their true value. Picture a marketplace where Mr. Market, a whimsical character Graham created, offers you this chance every single day. But here's the twist. You can choose to ignore his offers and wait for the perfect one. Sounds wise, doesn't it? That's the core of Graham's philosophy, embracing patience and riding the waves of opportunity. We'll explore how you too can apply these timeless strategies just like Warren Buffett did at the tender age of 20. Stick around. Every seasoned investor started right where you are now. So what can you expect from this guide? Well, get ready to journey through insightful strategies, historical market lessons, and practical tips designed for every investor. Whether you're a cautious defender of your wealth or an enterprising trailblazer looking for market opportunities, Graham's advice is your map. By the end of this series, we'll promise you a greater understanding of how to guard your investments and grow your wealth intelligently. Are you intrigued yet? Ready to transform how you see the market? Hold on to that curiosity as we unravel the insights from The Intelligent Investor. Remember, you're never just a spectator. You're part of this financial adventure. Let's begin. Let's jump into the heart of The Intelligent Investor with its illuminating preface. Imagine Warren Buffett, young and eager, picking up Graham's book and declaring it the best investment guide ever. Graham's teachings focus on simple yet profound principles. To succeed in the stock market, you don't need a high IQ. You need what Graham called a sound framework for making decisions, and the grit to stick to it. Buffett and Jason Zweig praise Graham's approach for its clarity and effectiveness. It's like being handed a compass in the wilderness of financial markets. Follow it, and you'll avoid pitfalls that trip up less disciplined investors. Benjamin Graham didn't just teach investing, he revolutionized it. This giant of finance didn't start amidst riches. He grew from humble beginnings in London. His classroom at Columbia University wasn't just about learning figures. It was about shaping minds to think critically about money and markets. His lessons are grounded in real-life experiences, with key principles. Think of stocks as businesses, remember market mood swings, focus on current value over speculation, and most importantly, keep your cool. It's these teachings that built the foundation of value investing, preparing you to be smart and steady even when markets go wild. Ready to guide your own financial ship? With insights from Graham, you're equipped to set sail through the financial markets like a pro. As we gear up to explore Graham's distinct investment philosophy, keep these navigational points in mind. First, investing isn't a get-rich-quick scheme. Second, beware of speculative trends. They're like shiny traps in the market jungle. And third, understand the difference between being a defensive investor who guards wealth and the enterprising type who seeks new heights. Graham assures us that knowing our market landscape makes all the difference. Follow his wisdom and you're on course for greater financial stability. Hold tight because next we explore how past market tides shape the journeys we embark on today. Let's take a stroll down market memory lane. Ever wondered how past market waves shape today's investing? Graham's Chapter 3 unwraps a century of market highs and lows, your essential map to understanding the journey from 1871 to the 1970s. Starting with the cycle-heavy early 20th century, followed by the heady surge leading to the 1929 crash, and then onto the post-World War II boom of the 1960s. These eras teach us a key lesson: that growth is punctuated by cycles and each boom can carry a hidden bust. But remember, history doesn't guarantee repeats. Analyzing these patterns helps prevent complacency and warns against getting swept up in market optimism. Graham guides us to balance stock dreams with realities and always keep one eye on underlying market health. Get ready for a peek into how rational evaluation transcends fleeting emotions. In the investing world, aim for a balanced portfolio. Now, Chapter 4 gets practical, zooming in on securing investments for the defensive investor. The magic ratio, around 50% in high-grade bonds and the rest in steady stocks. Adjusting for your risk appetite. Think of it this way. Buy when panic strikes and hold steadfast during booms. Graham highlights the risks of emotional buying and selling, advising rules over impulses. Remember, your game plan is your strongest shield against market chaos. And let's not forget about common stocks. In Chapter 5, Graham lays out 4 golden rules for choosing wisely. Diversify wisely. Favor stable, well-financed giants. Look for consistent dividends, and stay grounded with price-to-earnings discipline. This isn't about chasing explosive growth stocks, which can be as unpredictable as fireworks in a storm. Stick to Graham's principles and your stocks stand strong through both calm and turbulent seas. Prepare yourself, because understanding and implementing these strategies sets the stage for profitable investing. Next, we explore strategies tailored for both defensive and enterprising paths. Are you ready to craft your portfolio masterpiece? Stay tuned. Are you ready to dive into strategies for enterprising investors? In Chapter 6, Graham gives us the roadmap. For the adventurous who seek higher returns, this isn't about luck, it's about clear strategy and knowledge. Begin with a solid base of high-grade bonds and value stocks. Then look at everything else, but remember, every step must be only as risky as you can understand. Graham warns, avoid second-grade bonds and new issues. They might dazzle at first, but without deep analysis, the shine fades fast. Think of investing like exploring. Stick to paths you know, tread carefully, and steer away from the seductive yet slippery slopes of speculation. Chapter 7 takes us further, showing how enterprising investors can navigate complex market waters. First up, Graham's 4 strategic plays. Buy cheap and sell high with timing, pick growth stocks with care, find bargains for less, and seize special situations like mergers. It's about beating the market with calculated precision. Learn to spot hidden gems, undervalued giants awaiting market recognition. And remember, it's not about predicting the market, it's about understanding company fundamentals. Keep the excitement balanced. Your guide is knowledge, your goal is discovering value, and your edge is staying cautious. Dodge the pitfalls and enhance your returns with Graham's insights. Now, meet Mr. Market. In Chapter 8, Graham describes this whimsical character who showcases the need to resist market emotions. Mr. Market might panic one day and celebrate the next. Your role? Stay calm and ignore the noise. Focus on the intrinsic value over erratic price swings. Remember, buying too high or selling too low plays into Mr. Market's whims. Maintain your course, leverage downturns smartly, and trust in solid valuations rather than fleeting trends. This chapter isn't just about investment strategies, it's about mastering the essential art of mental fortitude in the stock jungle. Finally, let's embrace the world of mutual funds and financial advisors in Chapters 9 and 10. When venturing into funds, Graham tells us what to keep in mind: fees, management quality, and fund alignment with your goals. Here's the reminder: successful funds often reflect the market, not outshine it. Meanwhile, when hearing from advisors, remember they're guides, not gurus. Partnership over promises. Getting it right means selecting reputable, skilled helpers. Combine their wisdom with your own analysis to ensure your strategy thrives. This isn't just teamwork, it's smart investing. Ready to dive deep into the art of security analysis? Chapter 11 is your gateway to mastering this skill. Graham gives us a strong foundation, teaching us to evaluate a company's past, present, and potential future. So let's break it down. 1. For bonds, check if earnings more than cover interest. 2. With stocks, watch out for speculative forecasts. Instead, try Graham's simple formula: value equals current earnings times a factor. Do this and you'll see past short-term market noise to spot real investment opportunities. Journey on to Chapter 12, where Graham teaches us to be cautious with earnings reports. Short-term numbers might tempt you, but dig deeper. He takes us through the maze of ALCOA's earnings, pointing out how special charges and inventory moves can disguise reality. Lesson: rely on long-term averages. Truth is often somewhere hidden among footnotes. Armed with skepticism and insight, you can see through the smoke and mirrors. Make informed decisions that align with your long-term plan. Now, on to Chapter 13 for some hands-on analysis. Graham compares different NYSE companies, and it's a balancing act of metrics. Look at profitability, stability, growth, and dividends and weigh them all. Every stock tells a different story through small ratios and big ambitions. It's about picking stable, secure investments over flashy promises. Assess value calmly and pragmatically, much like a sculptor crafting with precision. Graham's lessons here resonate deeply. They're about understanding risk and reward. Are you ready? Let these insights guide you on to our next phase of powerful investing strategies. Welcome back to our journey with the intelligent investor. In Chapter 16, Graham invites us to explore the fascinating world of convertibles and warrants. Picture a convertible bond. It's like a financial chameleon, balancing between bond safety and stock excitement. But beware. While they promise versatility, they can dampen yields and inflate common shareholder risks. Graham, ever the cautious guide, encourages rigorous scrutiny before diving in. Whether it's assessing conversion privileges or sidestepping warrant temptations, the key is understanding the trade-offs before taking the plunge. Moving on to Chapter 17, Graham shares 4 gripping case histories, like stories from the finance world that are both educational and eye-opening. From the fall of Penn Central to the excessive buyouts of Ling Temco Vought, these tales emphasize the gravity of due diligence. At the heart of each story lies a lesson. Don't get swept away by rapid growth and flashy numbers. Dig deeper to uncover the essence of financial health. Remember, in investing, knowledge isn't just power, it's also protection against repeating historical errors. Chapter 18 offers a lesson in contrasts, with Graham dissecting 8 pairs of companies. Think of it like a financial split screen, helping us see which strategies click and which crumble. From the cautious steadiness of real estate trusts to the tumult of overambitious expansions, Graham paints a rich canvas. Here, discipline and insight turn speculation into tangible understanding. Remember, it's not just about mimicking success but learning from failures too. This analytical prowess prepares us for the next chapter's focus on shareholder engagement and corporate decisions, keeping us sharp, savvy, and ready to delve deeper into the art of investing. Welcome to the core of smart investing, Graham's famous margin of safety in Chapter 20. Think of it as your investment safety net, cushioning you from financial mishaps. Start with bonds and preferred stocks. The wider the gap between earnings and obligations, the safer your investment. Boost your margin by picking stock earnings that surpass bond rates. Got that? You're building a protective shield. And diversification? That's your insurance strategy, spreading the risk and reaping steady returns. Onward to the postscript, where Graham spins a gripping tale of 2 investors achieving big wins through strategy and instinct. Their story teaches us valuable lessons. Multiple paths can lead to riches, shrewd decisions often triumph over many small choices, and with preparation and bravery, high-potential opportunities are yours for the taking. In investing, every choice matters. Balance risk, use insight, and harness your courage. Graham's wisdom rings clear. Trust in your future, and your journey in finance can be a powerful voyage of discovery. So how does successful investing sound now? With Graham's insights, your journey is more than transactions. It's about building confidence and foresight. Future-ready investing rests on sound principles, thoughtful choices, and steady courage. The art of discerning value, whether in calm or stormy markets, is your key. Next, let's unlock latent wisdom tucked in the appendices. Timeless analyses and practical insights await. Still with us on this finance odyssey? Great, because knowledge is power and you're armed with both. In Appendix 1, we join Warren Buffett at Columbia University, where he shatters the efficient market hypothesis. Picture a room buzzing as Buffett highlights the power of value investing, an art form practiced by the superinvestors of Graham and Doddsville. These masters prove that reliable patterns exist in market chaos, exploiting inefficiencies through disciplined strategies. Their message: don't be swayed by luck or trends. Stick to the core principles of buying undervalued businesses, and success will follow. Buffett argues that good judgment isn't random, it's honed by age-old wisdom. As we explore Appendices 2 and 3, Graham unfolds the complexities of investment taxation, both past and present. Understanding tax laws becomes your ally, helping shape strategies to boost after-tax returns. These insights guide you through balancing different types of income and maximizing the benefits from dividends and capital gains, with careful attention to evolving tax regulations. Finally, travel through the speculative landscapes of Appendices 4 through 7. From vivid tales of hype technology firms to intricate tax strategies and acquisitions, Graham's reflections warn against the seductive pull of exuberant markets, emphasizing the core mantra of diligent analysis and inherent value. These stories arm you with the foresight and caution needed to thrive amidst market volatility. And there we have it. As our journey concludes, remember that being an intelligent investor isn't just about absorbing knowledge. It's about applying it wisely. Keep the principles of Graham and Dodd at your side, and may your investment path be bright. And here we are, at the close of our journey through The Intelligent Investor. We've seen how Benjamin Graham's timeless principles continue to enlighten the path for both new and seasoned investors. His wisdom, complete with lessons on intrinsic value, Mr. Market's whims, and the crucial margin of safety, provides a foundation for successful investing far beyond his time. Graham's influence is undeniable, touching the lives of legendary figures like Warren Buffett and countless readers worldwide. His insistence on a disciplined approach makes us rethink how we navigate the financial markets, encouraging us to act on reason, not emotion. We've traversed chapters rich with strategies, case studies, and undeniable insights. Now it's your turn. Whether you're looking to build wealth or simply understand investing, remember, knowledge is a lifelong pursuit. Read the book to deepen your comprehension and make empowered financial choices. If you found value in our exploration, like this video, and consider subscribing for more insights. Thank you for joining us on this financial odyssey. Your investing journey has just begun.